Welcome. In this video, Zbcn Coin made a new partnership agreement. Is pump coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
But first, let's analyze Zbcn.
Trend reversals in the markets often begin so quietly that they can be overlooked. But for attentive observers, changes in certain technical structures signal significant potential. Especially after prolonged downtrends, the first structural shifts typically indicate the start of a major upward trend. In this context, when we closely examine the price movements, we see that the price, which had been forming consistently lower lows and lower highs, clearly positioning itself within a downtrend, is now beginning to change that structure. This is a highly valuable and promising development from a technical perspective. During the downtrend, the price failed to surpass previous highs in every attempt and continued to fall below previous lows with each pullback. Such structures indicate a negative market psychology. Sellers dominate and buyers are weak. Whenever buyers try to push the price upward, sellers step in and apply pressure, dragging the market down again. As this cycle repeats, pessimism takes over. Investors gradually lose hope and the decline deepens. However, no trend lasts forever. Declines eventually end and give way to rallies. Right now, we appear to be at the very edge of such a reversal. The long-observed and nearly habitual lower low, lower high structure is finally beginning to end. In the most recent price movements, this pattern has been broken for the first time. A higher low has formed compared to the previous low, and the subsequent rise has pushed the price above the previous high, creating a higher high. In technical analysis, this is called a higher low, higher high structure, and is one of the strongest signals that an uptrend has begun. A higher low indicates that the market is no longer allowing deeper pullbacks, and that buyers are now entering the market with more strength. More importantly, the rally from this low surpassing the previous high signals a major shift in market psychology. Buyers are no longer simply viewing dips as opportunities, they are also more willing and confident in pushing prices higher. Sellers, on the other hand, are starting to weaken. Resistance levels that previously held strong are now breaking, and prices are moving upward more freely. This change is often not recognized at first by most investors. After long declines, market participants' psychology is damaged. No one wants to believe that prices can rise. However, technical structures and price actions clearly reveal this transition. That is exactly what is happening now. As the price begins forming higher lows and higher highs, it clearly shows that the downtrend has ended and a new uptrend is beginning. Such a reversal carries major potential not only for short-term investors, but also for medium and long-term participants. Trend reversals are typically the starting points of large moves. The market is entering a new cycle. These types of structures often precede strong rallies because when a trend shifts technically, prices begin targeting new support and resistance levels and may move into previously untested territory. This provides serious profit opportunities for investors. In technical analysis, trend direction is everything because prices tend to move in the direction of the trend. This makes trend reversals critical turning points. If a downtrend gives way to an uptrend, it means that the dynamics of the previous bearish phase have lost relevance and a new narrative is unfolding. That's why the appearance of a higher low and higher high structure is such a valuable technical signal. Additionally, this structure can lay the groundwork for certain technical patterns to emerge. Patterns like the double bottom or inverse head and shoulders, both of which support bullish momentum, can start to form shortly after the higher low, higher high structure appears. These are additional technical elements that confirm the uptrend may only be in its early stages. In summary, the fact that the price is now making higher lows and higher highs is extremely positive and offers a hopeful outlook for the future. This structure clearly shows that the balance of power in the market has shifted from sellers to buyers. Such setups are rare and valuable in technical analysis because they indicate trend reversals at a very early stage. Investors who position themselves correctly at this point can achieve significant gains in the newly developing uptrend. For all these reasons, the current setup is a critical technical signal that should be monitored and evaluated closely. Considering the uptrend may just be getting started, the market could be opening the door to a new and strong upward movement. Therefore, it is crucial that investors do not overlook this structural change, but instead thoroughly analyze the opportunities this technical transformation may offer. But We cannot base our analysis on this alone. Let's take a look at other metrics as well.
When we examine the price action, a notable detail that stands out in the current structure is the presence of a bearish order block located in the upper region of the price chart. This bearish order block is a critical liquidity zone where institutional investors previously placed high-volume sell orders that pushed the price downward. These types of areas are typically where supply outweighs demand and are vital in determining market direction. In technical analysis, such blocks provide a significant advantage for tracking institutional activity, as they represent zones where the market's liquidity balance has shifted and strong sell orders have been triggered. Therefore, when the price approaches such a zone again, it's quite common to see renewed selling pressure, just as it happened in the past. Currently, the price is trading very close to this bearish order block. However, reaching this level does not necessarily mean it will break through it immediately. These types of structures are usually not easily broken on the first attempt, especially if it's the price's first approach toward the block. The sell orders it encounters there can cause an immediate pause or even a pullback. How the price behaves as it nears this level will also reveal the strength of the block. If it is indeed a strong selling zone, the price will react sharply and retrace downward, indicating that sell orders in this region are still active and respected by market participants. Moreover, prices often require multiple attempts to break through strong bearish order blocks. The first touch usually acts as a retest, where the price approaches the block, reacts with a pullback due to selling pressure, then gathers strength for another move upward. If the block is broken on the second or third attempt, it is considered invalidated, and the price will likely continue toward the next resistance level. Therefore, the likelihood of the price breaking through this block on the first try is low, and it's expected to weaken the area with repeated tests. During this process, we may observe short-term corrections and sideways movements. In such scenarios, it's important for investors to remain patient and view these block interactions not just as a touch, but as a process. Additionally, the way the price approaches the block is crucial. If the price arrives at this level with strong and high-volume momentum, the likelihood of a breakout increases, indicating strong buying interest in the market. On the other hand, if it approaches with low volume and weak momentum, the sell orders at this block can easily halt the upward move. So, the momentum behind the price's move into the block gives us valuable clues about whether a breakout will occur. Furthermore, the structure that forms after the block is broken is also very important. If the block breaks, the price typically pulls back to test the same area. This is known as a break and retest formation. In this formation, the price tests the broken resistance as support and starts a new upward move from there. This gives us a chance to determine whether the breakout is real or fake. In technical analysis, bearish order blocks are not just resistance levels, but also psychological boundaries. This is because traders who previously sold at a loss in these areas may want to exit their positions when the price returns to this level, increasing selling pressure. Such behavior can make it even harder for the price to break through these blocks. However, no block remains effective forever. Over time, the orders within the block get absorbed and the price may eventually push through. Therefore, breaking a block is the result of a combination of timing, momentum, and trader psychology. At this point, investors should be cautious of potential fakeouts as the price attempts to break through the bearish order block. Sometimes, the price may appear to break the block momentarily, only to quickly fall back below it due to a strong wave of selling. These kinds of moves are often stop-hunting strategies and increase the likelihood of manipulation. That's why it's safer to remain cautious and wait for confirmation before taking trades. Confirmation typically comes from several hours or daily candle closes above the block. Bringing all this together, we can say that the bearish order block above the current price is a significant resistance zone and is unlikely to be broken on the first attempt. However, if the market is moving with strong momentum, the sell orders in this block may weaken over time and the price could eventually break through. This process requires a multi-layered analysis that includes both technical formations and trader psychology. If the price manages to break the block, it could gain significant upward momentum. Otherwise, renewed selling pressure from this area could push the price back down. Therefore, approaching such blocks with a careful and strategic mindset will always be the healthier approach.
This announcement, shared by Zebec on its official X account, provides significant insights into the platform's future strategic direction. According to the statement, Zebec has announced that it will now manage its treasury at an institutional level with Uphold Inc. This development can be considered a strategic move aimed at building trust among both institutional and retail investors. Zebec's latest step is not merely a technical change, but also a clear signal of its desire to gain recognition in the institutional world, and a sign of a major structural transformation. Zebec's new partner, Uphold Institutional, serves nearly 10 million users, including both individual and large-scale institutional investors. Therefore, this collaboration stands out not only because of the broad user base, but also due to the credibility and trust it brings. Zebec's choice of this entity is a very clear indication that the company now aims to target institutional players, in addition to individual investors, as part of its long-term growth plans. Another key indication of Uphold's importance to Zebec is the amount of ZBCN it holds. It is reported that Uphold currently holds nearly $100 million worth of ZBCN tokens in both its retail and institutional wallets. This highlights the depth of the financial relationship between the two entities, not just as a partnership, but also from a capital standpoint. Such a significant token reserve signals Uphold's confidence in Zebec and reveals how strategic this collaboration truly is. This amount of tokens can also serve as a strong assurance for potential institutional investors. Before investing in a token, large investors typically look for solid institutional backing, and Zebec appears to have built a strong support network in this regard. Zebec's desire to expand into heavily regulated markets such as the United States and the United Kingdom, markets dense with institutional investment activity, adds even more meaning to the timing of this partnership. In these regions, gaining investor trust is directly tied not only to having good technology, but also to having strong and reliable financial partners. Working with an internationally recognized institutional partner like Uphold will likely leave a positive impression on investors in these markets. This could significantly contribute not only to the token price, but also to the growth rate of the overall ecosystem over time. From an investor psychology perspective, partnership announcements like this typically boost confidence in the markets. Especially in volatile environments like crypto, investors seek to move away from uncertainty and toward more predictable projects. Zebec's announcement can be interpreted as a sign of steady growth and professional management. As a natural outcome, interest in the ZBCN token may increase along with trading volume. For investors, such news serves as concrete evidence that the project is not just about short-term price movements, but also has serious and long-term plans. Another key strategic move Zebec is making to appeal to institutional investors is its commitment to transparency. This partnership announcement serves as an outward reflection of corporate governance. While many projects in the crypto world still struggle to balance decentralization with institutional standards, Zebec demonstrates a more balanced and effective approach. Large-scale investors look for more than just technology. They invest in management, transparency, and partner reliability as well. In this context, working with a partner like Uphold shows just how committed Zebec is to building managerial trust. It's also important to note that Zebec handing over its treasury to an institutional structure does not mean it is moving away from decentralization. On the contrary, such moves exemplify how decentralization can harmoniously coexist with professional financial structures. These steps are essential for bringing the crypto world to the institutional level. Growth fueled solely by individual investors has its limits, but the inclusion of institutional investors allows a project to access much larger scale capital. Zebec is clearly repositioning itself with this goal in mind, strengthening its ties with the institutional world. Zebec's decision could also affect the supply-demand balance of the ZBCN token. A large entity like Uphold holding a significant amount of tokens may reshape the liquidity dynamics in the market. However, this is not a negative development. On the contrary, it should be seen as a very positive step in terms of controlled and professional liquidity management. Institutional entities usually do not sell abruptly. They tend to hold their assets long-term. This lays the groundwork for price stability for the ZBCN token. Furthermore, having such a large reserve held with an entity like Uphold can also be seen as a strong security measure against risks like hacking or fraud. Finally, this move by Zebec reflects not only its own internal transformation, but also sets an example for the broader crypto ecosystem. Such collaborations show that blockchain projects are no longer just tech-focused initiatives, but are beginning to integrate with large-scale financial structures. This indicates a maturing process in the industry. With this move, Zebec is clearly telling both its user base and potential investors, we're thinking bigger now, we're working with more trusted entities, and we're operating with a long-term vision. This message provides a strong strategic foundation that could lead not only to increased value of the ZBCN token in the future, but also to broader adoption of the Zebec platform by more users and investors. As more partnerships like this are formed, the price may increase.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.